After studying this module, you shall be able to first know the meaning of accounting equation, learn how to formulate accounting equation, identify the different components of accounting equation, and analyzing the business transactions. The accounting is purely based on the concept of separate legal entity. It means the entity of business is totally different from the person who owns the business. So, the enterprise is liable to the owner even in the respect of capital contributed by him. The enterprise may have also raised funds in the form of loan or even directly by purchase of goods on credit, etc. These outsiders will also have claim on the resources of the firm to the extent of their due amount. It is so because the profit always belongs to the owner only. Total claims is equal to total resources. Total claims can be classified into owners, which is capital, and outsiders, which is liability. You can also call your total resources as an assets. Now let us come to the meaning of accounting equation. Accounting equation signifies that the claims against the entity are always equal to the resources of the entity. The resources may be held by the entity in the form of cash, inventory, debtors, building, machinery, etc. The providers of funds have claim, which may be divided into two categories. First, owner and outsiders. At any point of time, resources of the business entity must be equal to the claims of those who have financed these resources. The owners and the outsiders are the providers of resources in the business, where capital plus liabilities is equal to assets. Here is an accounting equation whose source is Accounting by CA Dr. K. M. Bansal. The accounting equation is the relationship of assets and liabilities of the entity at the particular point of time. Since it depicts the components of balance sheet, it is also called as balance sheet equation. Now let us come to the elements of accounting equation. The accounting equation has three basic elements. First, capital. Now come to the capital. The capital or the claim of the proprietor is called as capital. It includes the initial and subsequent contribution made by the owner in the business as well as in the retained earnings. The capital increases by the amount of profits generated and decreases by the losses. It may be noted that when the owner withdraws money from the business for his personal use or takes other resources of the firm for the same, then it is termed as drawings. Such drawings are ultimately deducted from the capital. The capital may be in the form of cash, goods, or any other form. If business expenses are paid by the proprietor out of his own pocket, then also it is treated as capital contribution. It is also called as internal liability. Second classification is liabilities. It is an obligation of the entity in the favor of outsiders. It involves future outflow of the resources of the entity. It represents amount of money that the business owes to the parties other than the owner. It may be in the form of bank loan or term loan taken from financial institution, etc. The liability also arises due to trade obligations like sundry creditors, bills payable, outstanding expenses, etc. On the basis of time period, it may be divided into two categories, namely current and non-current liabilities. Now let's come to current liabilities. Usually, a liability is classified as current liability if it is expected to be settled within 12 months from the date of its financial statements. As per the Note 3 of Schedule 3 of Companies Act 2013, a liability shall be classified as current when it satisfies any of the following criteria, out of which first is, it is expected to be settled in the company's normal operating cycle. An operating cycle is the time between the acquisition of assets for processing and their realization in the form of cash or cash equivalents. Where the normal operating cycle cannot be identified, it is assumed to have duration of 12 months. Second, it is held primarily for the purpose of being traded. Third, it is due to be settled within 12 months after the reporting date, or the company does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting date. Terms of the liability that could, at the option of counterparty, result in its settlement by the issue of equity instruments which do not affect its classification. The examples of current liabilities are creditors, bills payable, outstanding salaries, short-term borrowings, that part of long-term borrowings which are to be settled within 12 months or etc. Now let's come to non-current liabilities. All liabilities other than the current are called as non-current liabilities. The examples of non-current liabilities are long-term borrowings, term loans, etc. Now come to another classification of third category, which are assets. Asset is a resource owned by the business with the purpose of using it for generating future profits. This reflects the economic resources expressed in monetary terms. The assets may be classified as tangible or intangible, with limited life or unlimited life, etc. But the major classification is fixed and current assets. Now let's come to current assets. Usually an asset is classified as current if it is expected to be converted into cash within 12 months from the date of its financial statements as per Note 1 of Schedule 3 of Companies Act 2013. An asset shall be classified as current when it satisfies any of the following criteria. First, it is expected to be realized in or is intended for sale or consumption in the company's normal operating cycle. Next, it is held primarily for the purpose of being traded. Then, it is expected to be realized within 12 months after the reporting date, or it is cash or cash equivalent unless it is restricted from being exchanged or used to settle a liability for at least 12 months after the reporting date. The examples of current assets are cash balance, bank balance, debtors, bills receivable, stock, short-term advances, outstanding income, expenses paid in advance, or etc. Now let's come to non-current assets. All assets other than the current are called as non-current or fixed assets. The examples of non-current assets are building, furniture, plant, goodwill, patent, etc. Now let's come to analysis of business transactions. It is true that accounting equation remains balanced all the time. It is so because any change resulting from the business transaction impacts the two sides or even one of the side of the accounting equation in such a manner that LHS remains equal to RHS. On such basis, these business transactions may be divided into three categories. First, affecting both sides. Next, affecting LHS only. Next, affecting RHS only. Now let's come to affecting both sides of accounting equation. A business transaction may affect both sides of the accounting equation. A transaction may affect assets on the one side and liabilities or capital on the other side. The following are the examples. First, increase in assets and increase in liabilities. First, machinery purchased on credit, raising bank loan. Next, we come to decrease in assets and decrease in liabilities. Like, take an example of repayment of loan or cash paid to creditors. Third, we come to increase in assets and increase in capital. For example, additional capital introduced in cash or furniture purchased for business out of private resources by the owner. Now let's come to decrease in assets and decrease in capital. For example, cash withdrawn by owner out of business for personal use or stock destroyed by fire. Now let's come to increase in assets, liabilities and capital. For example, building purchased for rupees 5 lakh, out of which 2 lakh has been paid by owner and balance yet to be paid. Another example, purchased a running business consisting of assets of rupees 4 lakh and liabilities of rupees 2,50,000 for a purchase consideration of rupees 1,25,000. Now let's come to affecting one side of accounting equation. A business transaction may affect the accounting equation in such a manner that only one side is affected. It may be any of the following. First, take an example of transactions affecting assets only. For example, goods purchased for cash, cash received from debtors, furniture sold for cash. Now take an example of transactions affecting liabilities only. For example, bills payable issued to creditors, bills payable dishonored, interest component converted into loan. Another is transactions affecting capital only. For example, interest on capital allowed, interest on drawings charged, salary allowed to proprietor. Now come to limitations of accounting equation. The accounting equation approach suffers from the following drawbacks. First, it can be used in case of every small business entities only. Next, there are certain transactions the effect of which cannot be ascertained from accounting equation. For example, business expenses paid by proprietor out of his own pocket. Next, sometimes the treatment is same in case of business as well as personal transactions. For example, the effect of salaries paid in cash and drawings is the same. This difference cannot be discerned by the users of accounting information. Next, this approach directly or indirectly contravenes the basic accounting principles. It is due to the fact that each and every transaction has to be incorporated in accounting equation immediately after its occurrence without waiting for another. Now, when wages are paid, it is deducted from capital totally, whereas the direct expenses should be added to the value of stock. Here the source is Accounting by CA Dr. K.M. Bansal. Now come to practical illustrations. Let's prepare an accounting equation on the basis of the following question. The first point of the question is Pramod started business with cash of 5 lakh. He purchased goods from Raju for cash of 50,000, sold goods to Bhuvan costing rupees 20,000 for cash and it sold it for rupees 25,000. Bought furniture for cash of rupees 15,000. Purchased goods on credit of rupees 35,000. Goods costing 5,000 sold for cash at a cost plus 20%. Cash paid to creditors on account of rupees 20,000. Personal expenses paid out of firm's cash of rupees 16,000. Cash paid to creditors in full settlement of 14,500 and depreciate furniture by 10%. Now let's present the last accounting equation in the suitable form of where capital plus liabilities is equal to cash plus stock plus furniture. The treatment of first adjustment is 5 lakh of capital plus liability 0 will be equal to 5 lakh of cash plus 0 stock plus 0 furniture. Second, 5 lakh of capital plus 0 liabilities which will give cash of rupees 4 lakh 50,000 plus stock 50,000 plus furniture 0. Third, 5 lakh 5,000 of capital plus 0 liability will give you cash of rupees 4 lakh 75,000 plus stock of rupees 30,000 plus furniture 0. Fourth, capital of 5 lakh 5,000 plus liability of 0 will give you cash of rupees 4 lakh 60,000 plus stock of 30,000 plus furniture of 15,000. Another fifth, 5 lakh 5,000 capital plus 35,000 liabilities will give you 4 lakh 60,000 of cash, 65,000 of stock plus 15,000 of furniture. Next, F part, 5 lakh 6,000 of capital plus 35,000 of liabilities will give you cash of rupees 4 lakh 66,000 plus stock of 60,000 plus furniture of 15,000. Then come to the G part, 5 lakh 6,000 of capital plus 15,000 liabilities will give you cash of 4 lakh 46,000 plus stock of 60,000 plus furniture of 15,000. H part of capital 4 lakh 90,000 plus 15,000 of liability will give you cash of 4 lakh 30,000 plus 60,000 of stock plus 15,000 of furniture. Then the I part will give you 4 lakh 90,500 of capital plus 0 liability which will give you cash of 4 lakh 15,500 plus stock 60,000 plus furniture 15,000. And I part will give you 4,89,000 capital plus 0 liability, which will give cash of 4,15,500 plus stock 60,000 plus furniture of 13,500. Now let's come to the balance sheet, where on the liability side we have capital of total 4,89,000, and on the asset side we have cash of 4,15,500, stock 60,000, furniture of 13,500, which will amount to total again 4,89,000. Now let's prepare an accounting equation for the following transaction, where the A part gives Anubhav started business with cash of rupees 5 lakh and goods of rupees 1 lakh. B, he purchased building for cash of rupees 2 lakh. C, he purchased goods from Tanya on credit for 50,000. D part, he sold goods on credit to Anish, whose cost was 25,000 and he sold it for 36,000. Then paid insurance premium of rupees 3,000, rent paid of 4,000, depreciation on building 8,000, cash withdrawn for personal use 20,000, salaries paid 6,000 and cash paid to Tanya on account of rupees 20,000, cash received from Anish rupees 30,000. Now let's come to its solution, where again capital plus liabilities is equal to cash plus stock plus building plus debtors. Let's come to A part, where 6 lakh of capital plus 0 liabilities will give you cash of 5 lakh plus stock of 1 lakh plus 0 depreciation plus 0 debtors. B part, 6 lakh of capital plus 0 liabilities will give you 3 lakh of capital plus 1 lakh of stock plus 2 lakh of building plus 0 debtors. C part, 6 lakh of capital plus 50,000 of liabilities will give you cash of 3 lakh plus stock of 1,50,000 plus buildings of 2 lakhs plus 0 debtors. Now come to D part, 6,11,000 capital plus 50,000 liabilities will give 3 lakh of cash plus 1,25,000 of stock plus 2 lakh of building plus 36,000 of debtors. On E part, 6,08,000 of capital plus 50,000 of liabilities will give you 2,97,000 of cash plus 1,25,000 of stock plus 2 lakh of building plus 36,000 of debtors. Then on F part, 6,04,000 of capital plus 50,000 liabilities will give you around 2,93,000 of cash plus 1,25,000 of stock plus 2 lakh of building plus 36,000 of debtors. On G part, 5,96,000 of capital plus 50,000 of liabilities will give you 2,93,000 of cash plus 1,25,000 of stock plus 1,92,000 of building plus 36,000 of debtors. On H part, 5,76,000 of capital plus 50,000 of liabilities will give you 2,73,000 of cash plus 1,25,000 of stock plus 1,92,000 of building plus 36,000 of debtors. On I part, 5,70,000 of capital plus 50,000 of liability will give you 2,67,000 of cash plus 1,25,000 of stock plus 1,92,000 of building as well 36,000 of debtors. Now come to J part, 5,70,000 of capital plus 30,000 of liability will give you 2,47,000 of cash plus 1,25,000 of stock plus 1,92,000 of building as well 36,000 of again debtors. And on the K part, the capital of 5,70,000 plus 30,000 of liabilities will give you 2,77,000 of cash plus 1,25,000 of stock plus 1,92,000 of building as well 6,000 of debtors. Now let's come to balance sheet, where on liability side we have capital of rupees 5,70,000 and on the creditors we have 30,000 amount, which will total and sum up to rupees 6 lakh. On asset side we have cash of rupees 2,77,000, stock of 1,25,000, building 1,92,000, debtors of 6,000, which will give total of 6 lakh. Now on illustration third, let's prepare an accounting equation for the following transactions. Also prepare balance sheet for the last accounting equation. The first transaction is business commenced with capital of 6 lakh, machinery purchased for cash of 30,000, goods purchased for cash of 40,000, goods purchased on credit of 45,000, furniture purchased on credit of 30,000, paid to supplier 20,000, rent paid in cash 10,000, salaries paid in cash 8,000, drawings in cash 20,000, goods sold for cash costing rupees 30,000 for rupees 45,000, insurance premium paid in cash rupees 5,000, depreciate furniture by 10%, business expenses paid by proprietor out of his own pocket of 4,000, paid to supplier in full settlement of his account of 24,000, depreciate machine by 5% and paid to supplier of furniture in part payment of rupees 10,000. Now let's come to the solution part. First transaction, 6 lakh plus 0 liabilities will give you cash of 6 lakh only. 6 lakh of capital will give you cash is equal to 5,70,000 plus machinery of 30,000. On C part, 6 lakh of capital will give you cash of 5,30,000 plus stock of 40,000 plus machinery of 30,000. On D transaction, we have capital of 6 lakh, 45,000 of creditors, which will give you cash of 5,30,000 plus stock of 85,000 plus machinery of 30,000. In E part, we have 6 lakh of capital plus 45,000 of creditors plus 30,000 of liabilities, which will give you 5,30,000 of cash plus 85,000 of stock plus 30,000 of furniture plus 30,000 of machinery. On F part, we have 6 lakh of capital plus 25,000 of creditors plus 30,000 liabilities, which will give you 5,10,000 of cash plus 85,000 of stock plus 30,000 of furniture plus 30,000 of machinery. On G part, we have 5,90,000 of capital plus 25,000 of creditors plus 30,000 of liabilities, which will give you 5 lakh cash, 85,000 of stock plus 30,000 furniture plus 30,000 of machinery. On H part, we have 5,82,000 plus 25,000 plus 30,000, which will give you a break of 4,92,000 plus 85,000 plus 30,000 plus 30,000. On I part, we have 5,62,000 of capital plus 25,000 of creditors plus 30,000 of liability, which will give you 4,72,000 of cash, 85,000 of stock plus 30,000 furniture plus 30,000. On J part, we have 5,77,000 of capital plus 25,000 of creditors plus 30,000 of liability, which will give you 5,17,000 plus 55,000 plus 30,000 plus again 30,000. On K part, we have 5,72,000 of capital plus 25,000 of creditors plus 30,000 of liabilities, which will give 5,12,000 of cash plus 55,000 of stock plus 30,000 of furniture plus 30,000 of debtors. On M part, we have 5,69,000 plus 25,000 plus 30,000, which will give cash of 5,12,000 plus 55,000 plus 27,000 plus 30,000 of debtors. On N part, we have 5,70,000 of capital plus 0 creditors plus 30,000 of liability, which will give 4,88,000 of cash plus 55,000 plus 27,000 of furniture plus 30,000 of debtors. On O part, we have 5,68,500 of capital plus 30,000 of liability, which will give 4,88,000 of cash plus 55,000 of stock plus 27,000 of furniture plus 28,500 of debtors. Then on P part, we have 5,68,000 5 lakh capital plus 20,000 liabilities, which will give 4,78,000 of cash plus 55,000 stock plus 27,000 of furniture plus 28,500 of debtors. Now let's come to balance sheet part. On liabilities side, we have capital of 5,68,500 and on other creditors we have amount of 20,000, which will total up to 5,88,500. And on asset side, we have cash of 4,78,000, stock of 55,000, furniture of 27,000, plant and machinery of 28,500, which will give you 5,88,500 total amount. Now let's come to the computation of profit under accounting equation approach. There are three components of accounting equation, namely capital, liabilities and assets. All the business transactions are incorporated using these three components immediately after their occurrence. Usually profit is calculated by the comparison of opening and closing capital as the excess of later over the former. To illustrate, let us assume following terms: CO, LO and AO are the opening balances of capital, liabilities, assets respectively. Similarly, C1, L1 and A1 are the closing balances of. Now profit may be calculated as follows, where profit will be equal to C1 minus C0. However, if there are drawings and or additional capital introduced during the period under consideration, then profit will be calculated as follows, where profit will be equal to C1 minus C0 plus drawings minus additional capital introduced. Now take an illustration. Here the following information is available in respect of business transactions of Mr. Varad appearing at the beginning of the year. Here Varad's capital, loan amount is 1 lakh, bills payable 1,40,000, fixed assets 1,60,000, stock of goods 1,20,000, sundry debtors 1 lakh and cash and balances, bank balances are Rs 60,000. Mr. Varad also reports the following balances appearing as at the end of the year, where again loan is 1 lakh, bills payable 1,60,000, fixed assets 1,44,000, stock of goods 1,80,000, sundry debtors 1 lakh and cash and bank balances 1,20,000. You are required to answer the following. First, using accounting equation, find out the opening capital, that is CO. Next, what are the values of L1 and A1 at the end of the period? Next, what is closing capital? Next, calculate profits earned during the year if Varad has introduced Rs 5,000 as additional capital. He has also used firm's cash amounting to Rs 21,000 for his personal purposes. Now let's come to the solution of A part, that is determination of opening capital, that is CO. Here AO, that is opening assets, will be equal to fixed assets plus stock plus sundry debtors plus cash plus bank balances, which will give you Rs 1,60,000 plus Rs 1,20,000 plus 1 lakh plus 60,000, which will amount to Rs 4,40,000. Now let's come to LO, opening liabilities, which is equal to loan plus bills payable, that is Rs 1 lakh plus 1,40,000 is equal to 2,40,000. We know that as per accounting equation, capital plus liabilities are always equal to assets. Therefore, capital is equal to assets minus liabilities. Therefore, CO is equal to AO minus LO, that is Rs 4,40,000 minus 2,40,000, which will give you Rs 2 lakh. Now let's come to the B part of determination of values of L1 and A1. Here A1, that is closing assets, is equal to fixed assets plus stock plus sundry debtors plus cash and bank balances, where rupees 1,44,000 plus 1,80,000 plus 1 lakh plus 1,20,000 will amount to rupees 5,44,000. Now L1, that is closing liabilities, is equal to loan plus bills payable, that is rupees 1 lakh plus 1,60,000 will give you rupees 2,60,000. And on the C part, let us determine the closing capital. We know that capital is equal to assets minus liabilities. So C1 is equal to A1 minus L1, that is rupees 5,44,000 minus 2,60,000, which will give you 2,84,000. Now let us come to the D part of computation of profit. Profit is equal to C1 minus CO plus drawings minus additional capital introduced, which is 2,84,000 minus 2 lakh plus 21,000 minus 5,000, which will give you rupees 1 lakh. Now let us come to summary. First point, it is the most traditional method of accounting and recording which has become defunct now. Next, the mathematical expression of dual aspect concept is called as accounting equation. Next, it is also called as balance sheet equation as it depicts the components of balance sheet. Next, capital, assets and liabilities are its three elements. Next, accounting equation signifies that the claims against the entity are always equal to the resources of the entity. Next, the providers of funds may be owner or outsiders. Then the accounting equation remains balanced all the time. The profit earned can be calculated under accounting equation approach in the following manner, where profit is equal to C1 minus CO plus drawings minus additional capital introduced. Then the accounting equation approach suffers from the drawbacks, like it can be used in case of every small business entities only. The effect of some transactions cannot be ascertained from the accounting equation. The basic limitation of accounting equation is that the effect of each transaction is incorporated through capital.